Okay, welcome back. 60 points lower. We're at 18,579, and things are under some pressure. A little bit of pullback is what we've seen. And this pullback is exactly an hour old. 10:40 or so is when the market made its high for the day. And from there, we've come off from that point, we've come off quite a bit. Keki Mistry is now joining us, Vice Chairman and CEO of HDFC Limited. Keki, great to have you with us here. Thank you very much for your time. Good morning, Prashant this side. Your sense of what the RBI did today in terms of policy, incrementally, should we read this as a little more hawkish? Should we have expected anything else? From a stock market point of view, that seems to be one strain of voice which is coming through to us. But your sense, sir?
Prashant, my sense is that we were all expecting a 35 odd basis points increase in the repo rate. I remember in the interview after the last policy, my view was that we would see another 35 basis points rise. I think the governor has kept the door open for a possible small hike in the next policy, possible. That is perhaps will emanate out depending on the data that comes through. And the data will also depend to a great extent on global events, what Fed does and so many other things. But generally speaking, I think we've reached almost the peak of the interest rate cycle. So at most, I repeat, 20-25 basis points hike in rates in the next policy, but then there will, to my mind, be a clear stop thereafter.
Okay, so just one more rate hike on the anvil, and that will be a small one, just about 20 to 25 basis points rate hike, right? Less than what we've seen.
That would be my reading. That would exactly be my reading. And even that 2025 may or may not happen. It will be hugely dependent on the type of data that comes through over the coming weeks.
Okay. Mr. Mistry, good afternoon and thanks for joining in. How do you see the real estate market behave now if there is this incremental 25 basis points rate hike? Up until now, I don't think the rate hikes have mattered too much in terms of demand. But what is your assessment of the way forward?
So, Sonia, my sense is that when a person is looking to buy a house, the long-term investment he's making. It's the single largest investment he makes in his lifetime. And because it's the largest investment, he wants to be comfortable that the property prices are right, the developer is good, he'll complete the project, the family likes the house. Interest rates don't make that much of a difference at that point of time. Also, we must understand that a housing loan on a door-to-door basis is nearly a 13 or a 15-year loan. And over 15 years, interest rates in India will go up and interest rates will come down. So it really does not make so much difference in a long-term loan whether interest rates are high at the time you take a loan or low at the time you take a loan. If they are high, they'll come down. If they are low, they will go up over that period of time. Interest rates become much more relevant for a shorter term loan. And in India, nobody can afford to give a fixed rate 15-year loan because otherwise you'd end up taking a huge maturity mismatch. So therefore, my sense is that the demand for housing will continue unabated. Sentiment-wise, every time there is an increase in rates, there is a marginal impact, but it's a very, very marginal impact. And within a period of a couple of weeks thereafter, the growth reverts back to the original level. So I would say demand will continue to sustain.
Right. Mr. Mistry, we've had many builders speaking to us over the last fortnight or so. We had DLF, we had Prestige, we had others as well, who came on and said that around as you get closer to the 9% odd level, home loan rate level, there is some amount of buyer hesitation which they've seen historically. 8.5, that is absorbed, but as you approach 9, it gets a little, there is an impact. Have you seen something similar, and where are we now? Yeah.
So, Prashant, we are not close to 9 at the moment. We still have some distance to go, and including this policy, and even if we do a 20-25 basis points hike in rates thereafter, I don't think we'll get to 9. But historically, interest rates for housing in India have been 9.5% many, many times over the last 7 or 8 years. If you take 2013, 2017, and various other points of time, housing loan rates in India have been 9.5%. And at 9.5%, the growth has still sustained and has remained strong. When it gets into double digit, then it becomes a little bit of a psychological kind of an issue. But I don't believe we are going to get anywhere close to that.
Okay, so double digit is when perhaps things turn a bit south. So I'm reading a statement that's come from Knight Frank. They're saying affordability of the home buyers has come down by 10% since the beginning of the interest rate hike cycle. That coupled with high inflation, rising rates, do you expect housing demand in 2023 to be less than what we've seen in 2022? And if yes, by how much? And if you could provide some more nuance to that.
Sorry, I would believe that the growth will only accelerate over time. And the growth will accelerate over time if you look at HDFC in particular, as a result of the merger with the bank, the growth can only accelerate because the full machinery of the bank's distribution will be used for, sourcing loans for us. Today, it's a very small part of the total number of branches of HDFC Bank that source loans for us. So that's one. The other is the penetration level of mortgages amongst the bank customers is very low, and that can only increase over time, but that's specific to us. But if you look at the system as a whole, I think the runway ahead is very, very long, very big. Structurally, demand for housing will always remain strong as long as the feel-good effect is there in the economy. People are comfortable, people are, their jobs are secure, people are seeing salary rises. Historically, we've seen that has a huge impact in terms of the willingness of people to buy a house, not so much interest rates. So interest rates there, psychologically, yes, little bit, but not that relevant.
In this current environment, what kind of improvement do you see in wholesale lending? I mean, you've been present there as well. So what's the outlook there?
So wholesale lending, as I mentioned, I think one time earlier on your show, the reality is that in a wholesale loan, a construction finance loan, for example, the disbursements tend to be more back-ended than front-ended. Because now if you go back to the last 4 or 5 years, the period from 2016 to 2020 was a period when there were not too many projects launched, particularly in the metros. Post-2020, I would say the middle of 2020, demand for housing has picked up, as you can see the data, in a very substantial manner. As the demand for housing has picked up, clearly more and more developers are launching newer and newer projects, bigger projects, larger projects, and so on and so forth. But the disbursement for these loans will only come on a back-ended basis, because first the developer, he applies for a loan, gets a loan, then he, buys the land which he's planning to buy. After he's bought the land, he has to start construction, and only thereafter the bank starts disbursing. Right. So there is a delay in making disbursements. So pipeline is reasonably good. Pickup will be there, but over a period of time, not right away.
Mr. Mistry, so good to hear from you as always. Appreciate you joining us here on this very special day. Always insightful. Thank you very much for your time on CNBC-TV18.
Congratulate you, your 25th year. So let me wish CNBC-TV18 and your entire team a very happy 23rd anniversary. I think it's been an extraordinary journey covering business and economy, not just in India, but globally. And one can easily see the way CNBC has constantly upgraded itself with the changing needs. A lot of credit goes to you for bringing business news and educating the investors in a seamless manner. So let me congratulate the entire team for all the good work you've done over the years.
Thank you. Thank you, Mr. Mistry. Thank you from all of us here. Really appreciate it. Thank you. We'll take a break here. We're back and more on the other side.